Barrera with the Investing News Network, and here with me today is Ryan Cochrane, Head of Zinc, Lead and Precious Metals at CRU Group. Ryan, thank you so much for being with us today.
Thanks, Priscilla. Happy to be here.
All right, well, once again here at PDAC, how are you finding investor sentiment towards base metals and maybe specifically zinc so far this year?
I think last year was very difficult, so I'll start with last year. I mean, the sentiment took a knock, certainly with the trade war, rhetoric ratcheting up, and Q4 was a very, very bad quarter. I think at the moment there's possibly a bit of a lift, but I'm kind of on the fence in terms of where sentiment sits.
All right, and what do you expect will happen to zinc this year? What actually needs to happen for zinc to make a comeback in 2019?
I think you've got two major stories in the zinc market at the moment. You've got the metal market, which is, you know, if you look at reported inventories, they're at sort of 10, 12-year lows. But on the other side of the coin, you've got the concentrate market, which has eased considerably. So you've seen spot TCs rise from sort of sub 20 in February 2018 to, you know, very far above 200 now today for clean concentrate. So I think investors are faced with a tug of war to a degree. The metal market is telling you a very, very positive sign, and there's some positive signals. But the concentrate market, perhaps as a leading indicator of what's to come, is bearish. So, you know, I think you've got those two sort of factors at play. I think to have a blowout in the zinc price, you would need those exchange stocks to effectively be wiped out. So you would need to see something like protracted disruption on the smelting side, which would lead to a further drawdown in metal stocks. I think that would be the impetus to drive a blowout.
And do you have a specific price prediction for 2019 for zinc?
We neutral to bullish for the first half of this year. We think the metal stock story will support prices. But in our view, as the year progresses in terms of mine supply coming on, there's a lot of mine supply coming. We think that will ultimately be converted into metal, and we think the metal market should return to balance. And investors, we would think, will front run the story a little bit, which would put some downward pressure on prices in the second half of the year.
All right, so let's talk a little bit about mine supply that you just mentioned. What is your view? What's going to happen in 2019? Are we set for a year of growth? And what are some of the challenges miners might face this year to bring supply online?
Well, I mean, you've got a lot of new entrants. You've got a lot of new projects starting up in Australia. You've got a lot of restarts. I mean, I was looking at this actually over the last 10 years. If you look at the zinc market and you look at basically from 2008 until present, you've seen about 70% of all the restarts happen basically from the beginning of 2016. So you've seen a lot of project approvals as well. 38% or so of all greenfield project approvals of the last decade happened in the last 2 and a bit years. So you've seen a lot of supply being committed. I think the challenge now is you've got a lot of new entrants into the market. So at the moment, Chinese smelters are not buying. TCs have shot up. So if you're a new entrant and your concentrate quality is not up to scratch and you're trying to place this in the Chinese market, you're going to have a challenge. It's going to be a challenge at the moment. So you've got concentrate quality stories, which are certainly valid. So New Century, you've got Gamsberg, so you've got this perception that there's a lot of concentrate that has got more impurities than the average batch of concentrates of the past few years, which is probably true. But I think to some degree that a lot of the mine supply coming is not just from new things like New Century and Gamsberg, and part of it is sort of restarts like Lady Loretta, so Glencore's bringing some new supply back. A lot of it's coming from India, so Vedanta, and a lot of it's coming from expansions and higher grades, things like Penasquito. So it's not just to say you're getting a batch of dirty concentrate coming forward. I think you certainly have some projects with more challenging concentrate specs. I think some of the newer, smaller entrants made trouble placing that at the moment. But saying that, by and large, I think there's by our numbers, there's nearly 1 million tons of mine supply coming this year, at least on paper.
So let's look at the other side of things. Smelters, what is your view on what's happening right now, and maybe in particularly in China? Will smelters increase capacity this year? What do you see happening in that front?
I think what surprised a lot of people, including ourselves actually last year, was particularly in Q2 and Q3, what happened is you had the metal price falling off at the period where TCs were also very low. So you had smelter revenues take a very large knock, and at the time, smelters came together and they said that they announced a 10% cut. And at the time, the market didn't really believe them. What actually happened was they did cut output, and there's a very strong cut in outputs in Q2 and 3, and that was profitability driven. That actually changed the concentrate market and it alleviated, so TC started to move up as a consequence of that. Now moving into this year, there's a lot of chatter around environmental restrictions on slag and residues and whether smelters can actively raise utilization rates in China. Our view is, we've looked at 16 of the major Chinese smelters, and we looked at 2018 output versus nameplate capacities in 2019, and we just from these 16 we see about 1 million tons of underutilized capacity. And if we look at our view of what those smelters are doing to address the challenges they're facing, which vary from environmental issues, financial, weak demand, we see about 400,000 tons, which could come from these 16 smelters. So we've put a quantitative point on 16 smelters. So we think utilization rates will rise. We think the Chinese smelters will come back. I guess the uncertainty, one uncertain point on all of that is whether the metal demand encourages the smelters to come back, because you need metal demand to be there as well.
All right. And touching on another factor that has been happening in the zinc space, warehouse inventories. There's some forecasts that said that inventory levels will be virtually eliminated this year. What is CRU Group's view on that? Will they continue to decline? And will they decline to the point that they will support a surge in prices this year?
I think that's the key question. I think that would have to be the bullish argument. If someone's taking the bullish argument for the zinc market right now, you would have to look at metal stocks. You would have to look at 3 years, last year being the third consecutive year of metal deficits. I think it's interesting. If you look at Q1 this year, you can see Chinese refined inventories have started to pick up. Of course, this is the Chinese New Year, so it's a seasonal pattern. LME warehouse stocks are, as everybody knows, near 12-year lows or something like this. So you don't need a lot to happen to wipe out those inventories. That said, I think it's going to be very important what happens now from March as the Chinese return from the New Year in terms of demand. And I think what will be very interesting is to track what happens with the refined stocks in China as a starting point. The other thing to bear in mind, it's very easy to look at your 12-year, your sort of reported stocks and say, well, they're at 12-year lows. I think that's true, but the message on the ground is somewhat different. So if you're speaking to consumers in Europe, North America, there isn't a perception that they're struggling to source metal. Now that can tell you one of two things. It can tell you that there is metal around that's off warrant, and that's our view. We still think there is some unreported material at higher levels than we saw in 06, 07. You haven't seen metal premia move up, and if there was genuine tightening and a genuine scramble for metal, you would expect metal premia to move up. Actually, quite the contrary has happened. They've been moving down and softening, which is placing an emphasis on demand. I think there's a lot of potential downside risk to demand.
All right. And my final question for you today, for investors that are watching us, that are looking into the zinc market, any other factors they should be paying attention to in 2019 that could impact the market?
Yeah, I think you've got a tug of war basically for a zinc investor right now. If you're looking at it, I think there was, if you look at the market historically, it tends to have short spikes where the market is naturally self-correcting. Now you've certainly seen the mine supply response. It's happened. The restarts have been approved, the projects have been approved, and the mine supply is coming. I don't think anybody argues about that. I think what would be unprecedented this time round is if all this mine supply came forth and it wasn't able to be converted. It's a naturally self-correcting cycle, because as TCs move up, you then incentivize the revenues of smelters. So to have a protracted imbalance between what's happening in the mining and the smelting side, I think would be unprecedented in the zinc market. So if I were looking at this and I was trying to sort of weigh up the options here, you've really got a tug of war. You've got the metal market telling you one thing, you've got the concentrate market telling you another thing. Last year when we spoke, we talked about a leading indicator as to when the market may turn, being spot TCs moving up. Of course, when they moved up, prices started coming down. I think what's interesting is that relationship broke down the end of last year. So you can't really rely on spot TCs to give you a steer. But if you're looking at the concentrate market as a clue, as perhaps a leading indicator of what's to come in the metal market, and of course investors tend to front run fundamentals by 9 months or so, I'd say you're probably going to have more emphasis focused on the concentrate side and the mine supply coming than on the metal market side. The only way you would see this metal market story playing out acutely and you asked earlier what would drive a blowout in the price. You'd really need to see metal premia moving up. And what that's saying is consumers who are covered by sort of 80 or 90% of their demand via long-term contracts are saying, hold on, we need spot material because demand is there, but we can't find it. And therefore we're going to pay a higher premium to get that. If that happens, that would be a very bullish indicator for zinc investors.
All right, Ryan, thank you so much for joining us today.
My pleasure.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today was Ryan Cochrane, Head of Zinc, Lead and Precious Metals at CRU Group.